So Naren, where are we headed now next? One side is this brute force of liquidity, whether it is retail or DI, whether it is FIs coming back. How does one approach in this market when you are getting about 20,000 crore of SIP every month and a lot of retail participation which is coming via direct equities? How should one invest in this kind of a liquidity dominated market?
Very tough task, Nikunj, because see, over the years and thanks to too much experience, I would call it, we are trained to be fundamentalists. We are not trained to think so much in terms of liquidity. We are trained to think in terms of fundamentals and valuations. So, and we have seen this phase, in my investing career, I have seen one such phase, particularly in this 94, 95 phase, where you had too much liquidity in the market. And we have again this phase. So what happens is when you have too much liquidity and valuations are high, and there doesn't seem to be any threat to the liquidity, there is no margin of safety. And the other positive at this point of time is that the macroeconomic environment of India is fantastic. So whether you look at fiscal deficit, you look at RBI dividend, you look at current account deficit, you look at inflation, you look at economic growth, look at economic growth differentials. All these things are also fantastic. So on one hand, you have fantastic liquidity in equity. On the other hand, you have fantastic macro. And on the other hand, you have valuations which are out of what you have seen in your career. So it puts you in a very confusing situation, which forced us to recommend asset allocation and recommend hybrid products. And that's what we've been doing with no scope to ever move to recommending aggressive investing over the last 6 to 9 months. It never gave us a chance. And it continues at this point.
Naren, what?
If you like this video, then like, share and subscribe to ET Now.